Welcome all to this Q2 earnings conference call on Tata Elxsi. We in Bangalore have with us Mr. Madhukar Dev, Managing Director. Due to urgent business work, Mr. Manoj Raghavan and Nitin Pai has to travel. So today we will be having only Mr. Madhukar Dev, who will start by giving the brief about our performance during this Q2. Thereafter, you can put the questions across to him for answering. And we would request that each of you should restrict to one question. If time permits, you can come back and ask further questions if you have any. Now I hand over to Mr. Madhukar Dev to take it away.
Thank you. Good afternoon. It has been a fairly good quarter on many fronts. In all the key focus areas for the company, we have made substantial progress in the quarter. We have been looking at larger deals with a longer engagement duration, and we've managed to bring in quite a few of those in the last quarter. We have been trying to grow our automotive business outside of our key account, and we had a very encouraging uptick in business from the automotive sector besides the key account. Our medical business, which we've nurtured over the last several years, is continuing to show very encouraging growth. And in the broadcast business, apart from winning deals, we have also been able to get into a new mode of engagement with a key customer, where we would have a share of the success of the product that we are helping our customer launch. In terms of financials, our numbers are already with you, and maybe to add to the published numbers, I may say that in the other income number that we have shown in our results, the component of foreign exchange gain is 14.7 crores. And the growth that you see in the published and the prevailing currency is over 9% as compared to the preceding quarter, and over 20% as compared to the same quarter last year. And in constant currency, this translates to a 3% growth over the previous quarter and about a 10% growth over the same quarter last year. In terms of marketing, we participated in a number of key events, and the most outstanding of these was the broadcast show in Amsterdam, the IBC, where we demonstrated our capability in technology based on the Android platform, as well as our capability in the OTT area, which is the fast-growing segment in the broadcast market. We have also participated in a number of other shows, including in the communication area and so on. In the design part of our business, we have won a number of awards in the last quarter for work that we have done in the earlier periods. And we are very pleased that our contribution in designing the Tata Experience Center in the renovated Bombay House has been appreciated all around, and it is a very visible success of our capability. So with that, I'd be very happy to address questions that you may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Qtr2 from DHFL Pramerica Asset Managers. Please go ahead.
Yes, hi.
Hello.
So, the question regarding the overall impact on revenue growth that, the management sees due to the slowdown at one of our large accounts in the auto segment out of the UK and possibly the uncertainty which surrounds the Brexit.
Yes. You're right that there is a considerable uncertainty on how things will shape up for our key customer, number one customer, Jaguar Land Rover. We are not seeing a very significant growth in our engagement yet, but we have considerable amount of confidence that once things settle down, given the value that we deliver to our customer and the respect they have for our work, our share of their business will definitely go up. In the interim, we are taking steps to grow our business in the transportation sector outside of this account, and we've made considerable progress in the last few quarters, and especially in the last quarter, in growing that business. So while we are confident that JLR will bounce back and will again start growing significantly, at the same time, we have been able to grow the other non-JLR accounts quite significantly too.
Right. So if I may just follow up with, so what would be percentage share of JLR, say about, 2-3 quarters ago and today? So, can we say that in spite of a slowdown at JLR, we are able to grow the other accounts?
Yeah. A few quarters ago, the percentage of our revenue that was coming from JLR was about 24%, and it's currently more like 21, 22%. It oscillates somewhere there. So there is a bit of a decline, yes, as a percentage.
So if you could just touch upon Brexit.
Really, your guess on Brexit is as good as mine. We don't know what will happen. But business has always found a way to continue irrespective of the legislation and the customs boundaries and so on. So I'm quite sure there will be business will continue. I don't think they will suffer too much, even if there's a very hard Brexit. So we're just seeing whether there's also a belief that there may be no Brexit also. So let's see what happens.
Right. Thank you. Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Yes. When the revenue will start to accrue the company, and how much revenue you mentioned about Hyundai Mobile's collaboration today. So when the revenue will start and how much we expect in financial year 19 and 20?
See, I'm not in a position to give you individual customer-wise revenue projections.
Okay.
But this partnership is interesting from many perspectives. And one of those is that this is a tool that we are building for them for testing in the autonomous driving area. A tool like this, once completed, would be of considerable use and can be jointly licensed by them and us to other customers. So it is more the strategic gain from it rather than the immediate revenue potential that is of significance in that tie-up.
And sir, one more request. After the result announcement, if you can give one investor presentation, so it will be helpful to investors. So what is going on? This time you have not mentioned anything about other income, which was big misinformation in results. So will you tell something about it?
Yes. I mentioned at the beginning that the other income includes Forex gain of 14.7 crores.
14.7 crore.
Yes.
Okay. So next year next quarter onwards, if you mention this thing in investor presentation along with the other income, it will be very helpful for investor. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ankit Shah from White Equity. Please go ahead.
Thanks for taking my question, sir. Sir, I had a question on the Panasonic deal. Sir, correct me if I'm wrong, but initially the deal with Panasonic was for product design for domestic and surrounding markets, and there was a second component wherein which involved development of core technologies for Japan and other global markets. So now, sir, has this deal been curtailed only to the domestic and surrounding market piece, or that second piece is also going on?
Both the objectives are being pursued, and the work is predominantly done here in our facility, which has people from Panasonic co-located in our facility. And their primary objective is to address the product requirements of this market, and at the same time look at intelligence and technologies that can be of use to Panasonic worldwide. So there's no change in the charter.
Okay. Sir, can you share the percentage of IP revenues for this quarter, and which segment contribute towards it?
There is really no change. It's very similar to the last quarter, very small still, and the bulk of it really comes from the broadcast business, and that's where we are. Really no significant change.
Okay. That's it from my end. Thank you.
Thanks.
Thank you. The next question is from the line of Roshali Jadhav from MIV Investments. Please go ahead.
Hello.
Yes.
Sir, in an interview to Economic Times on 3rd October, you mentioned about the double-digit quarter-and-quarter revenue growth. Could you throw some more light on it? What are the growth drivers, exact timeline?
Yes. First, that story that was published in early October was an interview that was done several weeks ago. And what I had mentioned was that our immediate objective is to get into a mode where we grow our revenues by 10% every quarter. And once we get that over a few quarters, then we can look at pushing it up further. So that stays as our objective. And if you see, we, with a little help from the falling rupee, we did come very close to 10% sequential growth in the quarter that's just gone by.
Sir, what are the growth drivers for this?
New engagements, essentially.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah, good afternoon and thanks for taking my question.
Good afternoon.
Sir, in the last call, you mentioned about margins, and you said that these margins are high and you intend to get it lower. Now, they are a bit lower than the last quarter. So are these current margins sustainable, or do you think that, to pursue growth, you could further bring margins down?
As I've been saying over several quarters, our objective is to maintain margins at about 24-25%. And it so happened that in the preceding quarter also it was higher, and in the quarter gone by it was even higher. But in our planning, we factor in about 24% as the objective and plan our expenditure on that basis. So I don't think we should take the current levels to be a norm. It is more happenstance. 24-25% is a good margin, and that's what we'll work towards.
Understood. So these you are saying EBITDA margins, right?
No, I'm saying PBT on sales.
PBT on sales. Okay. Which would include the Forex gain loss.
Yes. Yes.
Okay. Sir, and last question was a data point question. Sir, what was the Forex gain or loss in Q1 of FY19, if you could share that?
There was really very little. It was in lakhs. It was not even a crore.
Understood. Got it, sir. Thanks so much for taking my question. Best of luck.
Thank you.
Thank you. The next question is from the line of Vimal Gohil from Union Mutual Fund. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Sir, my question was really on JLR. So, if we are seeing some sort of temporary slowdown in that particular piece, does that really take anything away from our aspirational target of growing 20% for next couple of years at least?
No, not at all. And we are not seeing, very significant slowdown in the work coming out of JLR. What we are seeing is a change in the mix of work. We probably will be doing much more work offshore than on-site than we were doing before as compared to earlier quarters. So, in terms of volume, I don't think there will be much of an issue.
Right, sir. And, sir, just following up on the earlier question, the 10% growth that you are talking about, is it quarter-on-quarter growth or how is it?
Yes, it is sequential quarters.
And you're talking about targeting that later this year itself?
Yes.
Okay, so is this coming out from industrial design or is it coming from the engineering piece?
Mainly from the engineering piece, because even if industrial design grows at a much higher pace, it's only about 10% of our revenue. So it can't have such a big impact. It has to come out of our electronics engineering piece.
Right. Okay. That's great news, sir. Thank you so much. And
let me just clarify. Yeah. That is our objective.
Right.
I'm not projecting a 10% growth. And as I mentioned, that in the quarter that's gone by, thanks to the Forex situation, we did almost touch 10%. So that's all.
Right. Got the point, sir. Thank you so much and all the very best.
Thank you.
Thank you. The next question is from the line of Naveen Bothra, individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon. How are you?
Yes, I am fine, sir. Congratulations for once again good numbers.
Thank you.
Continuing from the IP revenues from the earlier question, if you can bifurcate in terms of revenue in this quarter, how much revenue we have booked in this quarter from IP-led revenues?
I don't have the exact numbers, but it is not very different as a percentage from the previous quarter. Okay. So we still have some work to do to make it come up to the 10% that we have been aiming at.
Yes. So by the end of this year, we will be near to that aspirational 10% revenues of the total revenues?
Yeah, that's what we are working towards. But let's see where we get to.
Okay. And the next question is regarding the autonomous vehicle space, which we were earlier saying that first autonomous vehicle, complete autonomous vehicle on road will be on our autonomous platform. So where we stand in this?
No, just to clarify, we started this endeavor with the objective of building skills to do two things. One is to generate IPs out of the whole solution, which could be licensed, and the other is to get service engagements from people wanting to do development in the area of autonomous driving, because we would be able to demonstrate our capability. And we had one engagement with a top car maker for implementing our entire solution on their R&D car, which was tested on a test track in Europe and met all the qualifying criteria that they had set out. So that was a significant achievement. But the solution that we have is not, while we can put it on a car and make the car move and make the car recognize, is not something that will suit a serious car maker. What will be of interest to them are specific subcomponents of the solution, which they could integrate with their solution and make it, accelerate the growth. So we are in discussions with a number of customers on possibilities of licensing subcomponents. The cars that we have running, whether it's in Bangalore or in Trivandrum in controlled environments, are demonstrators of our capability and the features that we have built into the platform.
So we have not booked anything licensing income from this autonomous vehicle, autonomy and all these things?
In the current quarter, we only completed that engagement with a car company which was tested towards the end of August or early September. Okay. So we have completed the delivery and the testing.
Okay. Great news, sir. If I may, one more question, if you allow.
Yes, please.
Regarding the total number of employees by the end of this quarter, 30th September, how much employees, regular employees are there in our office?
We were almost 6,000 employees, just a few less than 6,000.
Less than 6,000?
Yeah.
Okay. Thank you, sir. Thank you very much.
Thank you. Next question is from the line of Ashish Agarwal from Principal Mutual Fund. Please go ahead.
Yes, sir. Thanks. Just a couple of questions. First is on the fact that some of the European auto majors have given some profit warnings because of the diesel car issues and also because they have to shift to electric cars. So, first of all, on the electric car side, how much is the potential for us on the growth side for this? And my second question pertains to the industrial design business. Now, that business has been stagnant in terms of revenues. So, where do you see that business? How should we look at the growth in that business?
Okay, so taking the industrial design question first, we have seen new engagements come in the quarter that's gone by, and there are a few fairly interesting opportunities that we see in the current quarter. So I think we'll be back on our old growth trajectory for the industrial design business. In addition, a lot of integration between design and engineering is now has been accomplished. So a lot of our offerings to our key customers include an element of design, which varies from, the significance varies from engagement to engagement, but it is now an intrinsic part of our offering. So with these, developments, I think we'll be quite comfortable in growing the design business. As regards the European customers and the move to electrics and the slowdown, yes, all these are expected and factored into our scheme of things, because there's never been a period where the car industry has had a boom period for 15 years or 20 years without a slowdown. A slowdown is inevitable, whether it's due to diesel or it's due to Brexit, or there is some cause or the other. What I see as a major transformation in the car business is the possibility of cars being rented for use only and not being bought. And that has interesting implications for us, because then the cars would be owned by either the car companies or their finance arm or leasing arm or whatever. A very tight integration of technology and the ability to pay for use for a car. It's not something that will happen very quickly, but there's a good chance that it will be a reality in about 5 years' time. Okay. If you look at electric cars, we have, sort of quick and dirty transformation of the gasoline powertrain into an electric powertrain on the same vehicle. Yes, it moves, it works on electric power, but there are lots of intricacies involved in making a good quality electric car. As those of you who read about the challenges that Tesla has been facing, it's a fairly complex system in that the entire mechanical structure of the car has to be different to be optimal for the electric powertrain. Also, the drive mechanism, what is your drive motor strategy, will also determine how efficient the car will be. There will be trade-offs between acceleration time and battery longevity and things like that. So in each one of those areas, there is an opportunity for a service provider like us. So the shift to electric, while at one level it may just be shifting pollution from the cities to the power plants, is an interesting opportunity for a company like us.
Okay. And lastly, we also have a small communication piece.
Yes.
How will that benefit from the 5G capex?
It will benefit from what?
5G capex, the growth of
5G. Yeah, 5G, yes. You see, our offering there involves software-defined networks and software-defined networking, and which really takes the control and provisioning away from the boxes into the cloud. And the need for making changes will be accelerated with the launch of the 5G. So our big opportunity will really arise when more and more operators start moving towards 5G and reassess their capital strategy, expenditure strategy. And we see an opportunity emerging there.
But are we started to participate, or are we seeing deals coming on that, or is it still some quarters away?
No, we have some engagements which are already in, some others which are in the work, and I think the next 6 months should have an interesting turn on how SDN will be embraced by operators.
Okay, got it. Thanks a lot, sir.
Thank you. The next question is from the line of Sanjeev P. from Tamohara Investments. Please go ahead.
Sir, just wanted to understand the kind of growth that we're looking at or aspiring to 20% type of number. Is it dollar basis you are looking at, or rupee terms?
It's in rupee terms.
Hello?
Hello? Yes. Were you able to hear me?
No, it got disconnected in between.
Yeah.
Could you please repeat, sir?
Yeah, it's in rupee terms.
Okay. And sir, how many employees, the total number of employees that we have, what could be the split between on-site, offshore?
See, if our on-site revenues are about 40% and offshore is about 60%. So it would be somewhere about 25% of the workforce would be on-site.
Okay. Sir, last question, which is more of like quantitative or qualitative type of numbers. So, trying to understand the kind of engagement we have with, JLR and all. Obviously, the kind of spending that they do on R&D spend is a huge, humongous number, considering what we are generating. So to understand what exact type of work that we working with them, and what are the possibilities at least you see where we can offer and we can scale up?
The work that we do for JLR is predominantly in electronics engineering. And the R&D spend is obviously quite large, like in all car companies, and the bulk of it is spent in-house.
Yeah.
And then some of it is outsourced to local service providers, and some of these are specialized boutique houses which are doing specific kind of work, and then to service providers like us, which are more broad-based.
Yeah.
And we, as I've said once on a call earlier, that we are not the largest outsourcing partner in JLR, so that gives us considerable headroom to expand.
Okay.
So even if their overall pie shrinks, as long as we are delivering higher value for the money that they're paying us, there's a good chance that we'll be able to increase our share.
The recent news regarding the Hyundai tie-up and the engagement that we got, could you please throw some light what scope and what are the timeline that you are looking at?
This is an engagement with Hyundai Mobis, which is a tier 1 supplier. It's not the car maker.
Right.
And we are developing a tool for them which will accelerate testing of autonomous cars.
Okay. You have started working, or how is it?
Yes.
Sir, I just missed it, sir.
Sorry, could you repeat that?
I missed it. What are the timeline, or we have already started working with this engagement?
Yeah, the engagement has started.
Okay. Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hi, good afternoon, sir, and congratulations.
Thank you.
We started in automobile, transportation sector, with the infotainment, and so now how many other area where we are working in automobile side?
Infotainment continues to be a big play for us in the automotive area.
Okay.
There are interesting aspects to infotainment. On the one hand, there is adoption of a platform like Android, which is gaining traction. On the other hand, you have secure platforms like QNX from BlackBerry, with whom we have a partnership too. So infotainment itself has evolved. We continue to work in all the other areas of a conventional car, be it driver assistance or powertrain or body electronics. But the new opportunities are really in the area of electrification of the cars. So there's a lot of opportunity in what is required to make an electric car optimal, from safety, from battery longevity, from acceleration, and so many parameters. So we are really doing almost everything that has electronics in a car.
Okay. Sir, and one more question, if you can permit, one or two questions.
Yes.
Sir, we are also in designing. So in some of, this White House, tie-up with the Panasonic, we are, from the conceptual stage, have a tie-up, with the player. So how we are able to leverage those opportunity in going into further electronics, or either whether it's a home appliance or broadcasting or
So if you look at Panasonic, we may start with a design concept and eventually do the electronics that delivers the outcome that is required of the concept, and occasionally build artificial intelligence to make the appliance smart. So you may start with design, but you may go all the way back to artificial intelligence. So it varies from product to product and engagement to engagement.
And automobile...
But we have the capability to do it all.
And automobile, are we looking any opportunity on automobile side? I mean, that from conceptual designing stage to, I mean, taking full part along with till the vehicle is launched?
Yes, but obviously the car manufacturer will not rely on one service provider for the whole thing. Okay. So they slice it and offer different pieces to different service providers. And we have a play in all of it. So somebody gives us one, somebody gives us two, like that.
And how big the opportunity we are seeing in broadcasting and communication side? I mean, there once upon a time...
The opportunity continues with the transformation to internet TV. And you see, at a very broad level, you can watch video of the same quality or higher quality over the internet today as you could over your cable or later DTH. But the interfaces are still clunky, and therefore people are trying to build smartness either in the TV or a set-top box becoming a hybrid. So it can work as a cable or a satellite set-top box, also have an internet connection. So you see one interface and you have one way of viewing it. It's just that, so it delivers a smoother viewing experience. So we are seeing a lot of movement towards OTT, which enables internet TV. And we have implemented some OTT apps for our customers, and we see almost every broadcaster needing to make the transition in the near future. It's a big opportunity.
So can we see this broadcasting can be as large as...
I'm sorry to interrupt, but may we request you to come back in queue for follow-up questions? Participants, you are requested to limit your questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. Thank you. The next question is from the line of Akshvara from Praj FinCorp. Please go ahead.
Yeah, hi sir. I just wanted to know what kind of revenue visibility are we seeing from a medium to long-term perspective, say 3 to 5 years? Our aspirational aim is about 20%, but is it the actual visibility, are we seeing the same, sir?
We don't have visibility beyond the immediate future. So it is based on triangulation of market opportunity, availability of skills, availability of resources, and that's how we arrive at an aspirational growth rate of 20% year on year.
Right. So, for medium,
it's impossible for me to say what our revenue will be next year, for example.
Right. But medium to long term, we would be aspirational target would be 20%.
That's right.
Oh, all right. Thanks.
Thank you. The next question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Yeah, thanks for taking my question. Mr. Dev, you mentioned earlier about looking at larger deals and longer duration. So can you provide any metrics around that? I remember you had mentioned about 2-quarter duration earlier. So, I mean, do you see that changing, or in terms of TCVs that you're booking, is that going up?
Yeah, what we've been trying to do is to look at engagements which cross the 4-quarter boundary. So if we can have a multi-year engagement, all engagements are obviously not like that, but we're pushing and targeting for longer duration engagements, and consequently the contract values are much larger than the shorter engagements. So instead of facing this challenge and pressure of finding new engagements every few months, we're trying to see if we can build on the credibility that we have in the market and look at longer duration engagements. And we've made progress in the quarter that's gone by, and we have visibility of a number of other deals that we are chasing in the current quarter.
Sure. And a follow-up to that question, I mean, anything in terms of change in strategy, maybe in terms of sourcing, deal sourcing that you have changed, which is bringing you success, that and also on the automotive side, you talked about stronger traction outside JLR. So if you can maybe perhaps talk about maybe geographies that are driving that.
Yes, so the automotive one is really, growth is coming from all the key markets that we are targeting. That's Europe, Japan, and the US. And that's outside of JLR. And in terms of strategy, while there is no significant shift, but at almost by the month, the strategy gets refined depending on the change in the environment. So nothing significant as compared to last quarter, but if you were to compare with how we were pursuing business 2 years ago to what we are doing today, there would be a fairly significant difference.
Sure. And finally, just wanted to stitch together the outlook on revenue and margin. So I remember last quarter you talked about 20% YY growth rate in rupee terms. We were at 67, 68 to the dollar back then. So, I mean, would there be any, how would you see a constant currency, let me put it that way, constant currency, revenue trajectory, at least in the medium term? And why would margins target still be at 24, 25%? I mean, is it that there is contract repricing which is coming up at a changed dollar-rupee level, or there are investment plans that have got accelerated?
No, the margins in the current quarter were helped to some extent by the falling rupee. So it's not something that we would be able to sustain. Then we have taken on a fairly large number of new employees, and there'll be a certain amount of expenditure that will go into training them and bringing them up to speed before they can start earning revenues. And our plan is to continue doing this into the next year also. So given all that, the PBT percentage that I mentioned of 24-25% seems a more realistic one than what we delivered in Q2.
And also on the revenue growth number, if there's a constant currency number that you're tracking in terms
I actually do not have a constant currency number with me that I could share right now with you, but maybe in the next call we'll try and address this.
Sure. And finally, if you can just give me the utilization number, which was 81% last quarter. What was it for this current quarter?
With the new additions, it would be about 78-79%.
Got it. Okay. Thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Sagar Rastogi from JP Morgan. Please go ahead.
Yeah, hi. Thank you for taking my question. So just a follow-up actually on a previous question that has been asked. So you said that you are targeting lower margins from current levels because...
No, I'm not targeting lower margins. I'm only saying that margins that we had in Q2 may not prevail in all quarters.
Right. So should we, how should we think about the drivers for that drop? I mean, would it just be pricing where customers would come back and say...
I just answered the previous question that we have increased our workforce significantly in the last few months, and a lot of these people have to be trained at considerable expense before they can start earning revenues. And our plan is to, again, induct a fairly large number of people in the next calendar year. So, in order to grow the organization, we have to spend more money.
Right. So, fair to say it's more building the bench for the future growth. That's where...
Yes, it's building the workforce for growth in the future.
Right. And should we also think in terms of... so you also alluded to how you were trying to get engagements with longer duration. So to get there, I assume a lot of capabilities need to be added. And if that is so, would that also require certain investments?
Yes, it requires two things. It requires credibility with the customer, which normally comes out of engagements that you've had with the customer before. And if the area of work is new, then you have to add that capability too.
Understood. Lastly, so could you share the number of sales and support employees that you have versus billable employees?
I don't have the number readily with me, but I guess all non-delivery employees put together would be about 400.
Understood. Thank you, sir.
Thank you. The next question is from the line of Amit Jain from OJ Financial Limited. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon.
Sir, my question is regarding among the various industrial segments, do you see which segment has been driving the growth of 4C? That yes, the segment is automotive is one. So it is continue to do so, this segment?
What exactly did you say? Which segment is driving the growth of?
Sir, I just want to understand the segment, which industrial segment you see foreseeing will be driving the growth in the coming. So automotive, I understand that it is contributing about 60% of your EBT last quarter if I see the numbers. So is it going to be the main growth driver for you?
Automotive is about 60% of our current revenue. And we see that continuing at around the same pace. The rest of the transportation sector is a small component of the automotive revenue pie. We see potential for growth in the smart home area, which will be inclusive of broadcast, IoT, and a number of other technologies coming together. So the primary drivers will be these two. What we have nurtured over the years is our healthcare and medical practice, and which is now beginning to show very encouraging signs. So we should see in a couple of years' time that segment also becoming as significant as the others.
So my next question is about the type of engagement that you just mentioned in the previous question about the duration of your engagement, so the short duration. So just now the kind of new engagement that you are entering into, so what's the duration that you are targeting that is should be so that it gives you more sustainable visibility about the revenue?
I'm sorry, I couldn't follow the question at all. There's a disturbance on your line, or
Amit, actually there's some disturbance from your line. If you're on speaker, please turn that off.
No, I'm on headset only. Shall I repeat that? I will just try to repeat it again. Hello?
Yes.
Sir, you just mentioned in your previous question about the type of engagement, about the duration of those engagements. So if I understand correctly, you are what kind of, so I couldn't get it properly about the duration of those engagements.
Okay. Traditionally, our engagements are short duration projects, and a long engagement would be maybe 9 months, and the average would be 4 to 6 months. We're trying to grow from that to engagements that last over 4 quarters, so more than a year. So we've had some success in finding bigger, longer engagements, and there are a number of deals in the works which are also a similar nature.
Okay. Sir, if you permit, can I ask one question, or can I will come back again, if you permit?
Suggest you come back into the queue.
Oh, okay. Thank you. I'll wait.
Thank you. The next question is from the line of Ankit Shah from White Equity. Please go ahead.
Sir, just one more thing. So on the IP side, in the last call you spoke about an innovative drug discharge pen. So has there been any progress on that? Have we been able to license this to someone?
I will not be able to tell you specifically what is the progress and where it is licensed, etc. But like that and a number of other IP initiatives, these are an ongoing part of our operation, and it is not expected that they would have a major revenue impact immediately. So these are all initiatives which will bear fruit in the future.
Sure, sir. Thank you. That's it from mine.
Thank you. The next question is from the line of Niket Shah from Motilal Oswal. Please go ahead.
Yep, thanks for the opportunity. So just wanted to know about any new client wins that we have had in this quarter, specifically within the auto and the broadcast segment.
Yes, there have been new client wins. About 12 new customers have been added in the last quarter, and some are fairly interesting. But the big long-term engagements that we have got are from clients with whom we had engagements in the past.
So this 12 includes auto plus broadcast?
Yes, it does.
And the second question was, on the healthcare part of the business, what kind of customers are we really tapping here? Is it the medical equipment guys or is it the hospital guys? What exactly, when you said that, in the next few years it will be substantially larger, so a larger part of traction would come from the hospital or the medical equipment?
At the moment, the traction is more with the equipment makers.
Okay.
And at some stage, I see that transitioning to healthcare providers, where we go beyond, say, so to speak, outside the box into the solutioning of whatever we are working with.
Okay, sure. And within this broadcast part of the business, are we seeing any cannibalization? Because obviously, set-top box, people are moving from set-top box to, apps like Hotstar and all. So is both these segments growing for us, or one is not growing, another one is growing at a faster pace? So how should one really look at it?
See, at the moment, both are growing and are sort of converging.
Okay.
The handhelds will always use only the apps, but the large screen format would want a set-top box and the user would want a seamless experience irrespective of whether he's watching an OTT delivery or a satellite delivery or a cable delivery. And that's why the boxes themselves are changing, and that's where we are seeing an opportunity.
Sure. And final question, sir, last time during our interaction, you also highlighted that, within the autonomous car, it would initially start with braking, and Europe was about to come up with a regulation on the auto braking part of it, and you were supposed to deliver a particular solution to a particular client in Europe. So has that gone through, or that's supposed to happen? Because I thought that was supposed to happen in FY19, so...
I'm not aware. I'll probably have to check and revert to you.
Sure. And sir, what was the mix of offshore versus on-site in this quarter?
Niket, I'm sorry to interrupt. May we request you to come back in queue for follow-up questions? Thank you. The next question is from the line of Naveen Bothra, individual investor. Please go ahead.
Thanks, sir. That very question you have already answered in the earlier participants. My main question is regarding the cash use of cash for organic as well as inorganic, as we have the targets.
We are looking at opportunities to look at inorganic growth, and we made some attempts where the fit wasn't right or the valuation wasn't right. So we haven't succeeded yet, but the efforts are ongoing. There's a small group that works on this within the company, and we are hoping that
because we have earned around, I think, 160 crores cash profit in this half year, and the utilizations, rough utilization shows that trade receivable has gone up, other assets have gone up, or fixed assets have gone up. So around 50-60 crores have been invested in, I think, organic investments and all these things. Other assets, if you can quantify what these are.
I would not be able to quantify the amount that we have spent on organic expansion. It's mainly got to do with investment in basic tools and additional manpower, which will not be revenue earning for some time.
So, because the cash in hand has gone up by only 10 crores in this half year as compared to March. But cash profits are around 160 crores.
Right.
That's
now, for inorganic expansion, we may have, if we do make a significant one, it'll have to be much beyond the cash that we have in hand.
Yes.
So
around roughly 500 crores we are having.
Yeah, it's somewhere in that vicinity. Not quite 500 yet, but this cash can fund a small acquisition which is of strategic interest. But to get anything of scale, we'll probably have to look at funding it through other means. So
any merger and acquisition, not much cash, the equity swapping and all this in the board's discussion and all these things?
No, not currently.
Just throw brief light.
No, when there is, we will certainly share with you.
Okay, sir. Okay, thank you very much.
Thank you. The next question is from the line of Sanjeev P. from Tamohara Investments. Please go ahead.
Sir, regarding the Comcast engagement, there also we see some kind of slowdown and also disruptions that's going on. Are you getting any sense of shaping out there? If you can throw some light regarding the kind of engagement that you are talking about, the longer period engagements, or any other light if you would like to put there.
See, the set-top box itself is changing into a home gateway, which will be your main communication interface to the home. Okay. It will have features that will enable you to watch video from various sources in a unified, seamless experience. And there is really no slowdown in that. The slowdown is in the plain set-top box, which was primarily a device to deliver digital TV with conditional access. Okay. That market is nearing saturation, and therefore it will be in a new avatar that we'll see the set-top box coming into our homes.
Okay, sir. Thank you. Thanks, sir.
Thank you. The next question is from the line of Lokesh Daga from Kotak Wealth. Please go ahead.
Hello, sir. You said that the company is targeting multi-year engagements. If you look at the current revenue, can you tell us what is the proportion of revenue from multi-year engagements versus the revenue from short-term engagements?
Very small. The multi-year engagements, we just started winning some in the last quarter, so there's insignificant percentage in the reported revenues.
Okay, sir. Okay.
Thank you. The next question is from the line of Deepan Mehta from Elixir Equities. Please go ahead.
Hello. Yes, sir. Congratulations on good set of numbers. So I heard earlier in the call that you are increasing the number of employee strength as well as retraining them. Is it to do because you see greater visibility in your businesses, or is it to augment certain specific skill sets which are perhaps missing at present in the organization?
To grow our revenues, we need more people, and the markets that we address are looking promising. So this is the right time to expand, and that is the reason why we are adding to our workforce.
And the second question is that in the past you have clearly explained the various trends in the industry which are benefiting the company and how it has in fact outperformed the other software companies. Any new specific trends that come to your mind which perhaps will be driving growth even further? We all know about what is happening, the disruption happening in the auto industry and the entertainment industry, but any other specific macro or micro trends which have emerged perhaps in the last 6 to 12 months which may positively or negatively impact the company over a 3 to 5 year kind of medium term kind of perspective?
I'd mentioned earlier in the call that at some stage we will see people paying for use of a car rather than buying cars, that especially for the utility kind of vehicles. Luxury sedans people may still continue to buy and own. Associated with that will be a whole lot of software and engineering work that will enable people to pick up a car anywhere in any city and drop it in any other city and pay for the use that they derived out of that car. And car's health will be monitored, driving style will be monitored, so that the same driver, if he has bad driving habits, may not be offered the car again or may be charged a premium or additional insurance. So there will be a coming together of technology, of information, of data, analytics, all that I see as a big opportunity in the years to come.
Thank you very much.
Thank you. That was the last question in queue. I now hand the conference over to Mr. Vaidyanathan for closing comments.
Yeah. Thank you very much. With this, we come to the conclusion of this Q&A call. I would like to thank Mr. Madhukar to taking the questions and answering it. I'd also like to thank all of you for joining the call. Thank you very much. See you next time. Thank you.